right, so let's talk about what really moves price in the market. Because I mean, we talk about trade opportunities, we talk about entering in a buy, entering in a sell, trying to make profit and all these things that we discussed. But how about we get back to the basics and talk about how does the market actually move? Like, what is causing Euro USD to move from 1.100 to 1.101? What caused the price to go down? So today we're going to discuss that. Now, you people, a lot of beginners especially, they just think that the market moves randomly. You know, just price does whatever the market wants to do in that point, which is not true at all, of course. But the truth, what really happens is a lot more simple. It's a lot more logical. Every single movement in the market is caused by orders, okay? Buy or sell orders. Now, these orders are sent to the market by many different entities. And before you get excited, no, us, retail traders, me and you, we do not impact the market. Your buy order on Euro AUD or Euro USD or whatever pair does not have an impact. We are like an extremely small percentage of what the market is actually made of, but we are part of it. So all these entities, which we're going to talk about in just a second, are the ones who cause the market to move through these orders, these buy orders, sell orders, either an execution, a limit order, or a stop order, like we discussed in the last video. And essentially, how it works is that the buyers and the sellers in that particular pair decide where the pair should go, which means that if there are more buy orders, the price is gonna rise. If there are more sell orders, the price is gonna crash, it's gonna dump, it's gonna go down. It's essentially, if you can look at it as like an auction that it goes for 24/5. So 24 hours a day for 5 days every single week. It's like a consistent auction. People that are putting in, I want price to go up, I want price to go down, I want price to go up, I want price to go down. And then you have like a scale that decides, okay, there's more buy orders than sell orders, so price is gonna rise. Oh, no, now there are more sell orders than buy orders, so price is gonna go down. Essentially, in a very simplistic way. Now, who's actually moving price? Who's putting these orders that actually impact the market? If it's not us, then it's other key players. Probably heard about this word before, the big players. And essentially these players are the banks, the hedge funds, the institutions, the liquidity providers. And the only reason why we do not have an impact and they have an impact is because retail traders, they will trade with, most of them with hundreds of dollars, thousands of dollars, hundreds of thousands of dollars, millions, but that's pretty much it. Maybe tens of millions. For the big players, these are just, you know, chump change. You know, they have billions. They literally trade with billions of dollars or euros, whatever it is, every single day. So their orders create imbalances and create actual impact on the market. So if a big banks that decides to put in $20 billion on Euro USD shorts, so sell orders, trust me, the market is gonna feel that. Now, of course, they can't just do it at random, you know, they can't just literally manipulate the market. As much as they do it, they cannot do it in such an obvious way, which is why news events exist in the first place, which is something we're gonna talk about very soon. But that is something that they can actually do, and that they do, they get fined for it, in case you're wondering. But of course, if you're making trillions, what is $1 billion fine gonna do to you? You know, you're just gonna pay it off. That is like business expense, and then get back to manipulating the market. Yes, I know that sounds dark, but that is just the reality. But the good thing is, we do not have to worry about, are there more buy orders or sell orders? Are the big banks involved in this trade? Should I take this trade? Is a big bank or a big player gonna stop me from winning this trade? That is absolutely nonsense. You are not in competition with these people, okay? All you really have to worry about is supply and demand, because that is the true core of where the market goes, all right? Regardless if there are more buy orders or sell orders, that is only gonna decide the direction of the price. Supply and demand is gonna tell you where a price is right now and how you should approach the market based off of that. If the market is bearish, you could look for sell entries. If the market is bullish, you could look for buy entries. So you don't have an actual bias on which trades to look for because you're trading supply and demand, which is the core concept of the RTS strategy. Now, of course, we're going to talk about supply and demand way more in depth in this course, in this journey. But that is essentially what is at the core of the market. Now, the market also is constantly seeking liquidity. And that is also a very important concept, which a lot of people I've seen, especially in the SMC space, like to overcomplicate. It's not that complicated. Liquidity is used in a very simple way, but that is definitely part of the market. The market will always chase the liquidity. And there's many different ways in which you can use it to your advantage. Most of it is going to be just using these liquidity points as your targets for your trades. But in a very simple way, the market is moved by orders, nothing else. Who puts these orders? Most of them are the biggest ones. The ones that actually have impact are the big banks. So big banks, big institutions, these big players. And the reason why they are able to manipulate the market is because they have billions of dollars at their disposal. But still, you do not need to worry about any of this because you're going to be using supply and demand, which instead of just telling you are there more buy orders or sell orders, is going to tell you, is it a good time to look for a sell entry or is it a good time to look for a buy entry, which is a lot more useful than worrying about the big players. All right, I'm going to see y'all in the next one.